Hello, everyone. This is Dr. Michael Appiah. I'm here for us to talk about business filing to get ahead for 2025 tax year in the year 2026. So I'm here to let you know what you should expect when you are going to file taxes, some of the documentation when it comes to business owners, what you should do and what you shouldn't do. You see, why bookkeeping is very important and necessary in our tax filing as a business owner is that you don't mix any expenses at the end of the year. And what others do is that at the end of the year, they write some expenses on paper and bring it to the tax preparer. No, that is not acceptable anymore. You see, when you have gone through IRS auditing before, you will understand that as a business owner, you should do the right thing by doing proper bookkeeping. For instance, you are a transportation owner and you wait by the end of the year to write some things on paper and present to your tax preparer. You may forget some expenses that you incur in January or in February. But when you do proper bookkeeping, every expenses is captured. You see, for income, it's easy to remember all the income because the source of income is constant. Maybe you get every month 2,000 or 3,000. You can add up, or your owner or wherever you take your load from, they will send you a statement at the end of the day. But most of us, the problem we go through as business owners is that we avoid bookkeeping. And why bookkeeping is important? Because it helps you to build the business credit. It helps you to know the financial position of your business. And it helps you to also know the exact expenses that was incurred during that year. So if bookkeeping is in charge for you, you know that the right thing has been done. And when IRS is auditing you, you see, IRS auditing is not witch hunting. It's randomly picked. The system randomly picks someone and they audit you. So when IRS is auditing you as a business owner, these are some of the things that happen. If you don't have a business bank account and all your transactions go through the bank account, that you have bank statement to prove at the end of the month, every transaction or every expenses you use your personal account or your personal card to pay is being rejected. So at that time, if you have already filed and get a refund or you benefit from that filing, it will be reversed and you will be asked to pay back. And that is what most people don't know. So if you don't do bookkeeping, you are causing a harm to your own self than to the tax preparer that you think, oh, I don't want to pay an accountant to do bookkeeping for you. You see, the amount that you pay to an accountant to do a bookkeeping for you is tax deductible. So you don't lose anything. Whatever you pay to your accountant, you get it back by filing or by claiming it as accounting fee or bookkeeping fee. And the second thing, especially those who drive Uber and Lyft, for that one, you don't have much problem because the statement that you receive from Uber or Lyft or DoorDash doesn't record or give your mileage statement or give you your mileage. So what you should do is to get an app that you can keep your mileage records, because that has become a bone of contention with IRS that most people report mileages without any backing record. And when you are being audited, that mileage will be reversed and you end up asked to pay back as well. So the next thing is also to make sure that if you are Uber driver or you are a Lyft driver, make sure that you keep records of your maintenance, your repairs, you keep records of your oil change, you keep records of buying tire, your gas. The deduction on your Uber or Lyft expenses or statement, that one you can claim it because that is fees that they have Uber or Lyft have taken and you have to record it. But you cannot report your mileage and report your expenses that incur at the same time. So it's either you choose the mileage or you choose those expenses. But if you don't have records of those expenses, you end up reporting short or over reporting, and that is also an error or a disaster on your side. So let's come to normal businesses, healthcare professionals, African shops, lawyers, consultants. Yes, these are businesses that earn more than 100,000 a year. And such any business that earns more income, you cannot do away with proper bookkeeping. Because bookkeeping, as I said earlier on, it helps you to build the business credit. It helps you to give you financial position of your business. It helps you to know your cash flow and your cash inflow. So this is something that you can't mix it as a business owner. Don't be jack of all trade. Maybe you don't have financial or accounting background, or because you don't want to pay an accountant, you do anything, and you be caught by IRS, or you'll be causing harm to yourself. Because when there is an audit and there's no proper bookkeeping, you don't have supporting document, your expenses will be rejected and you'll be asked to pay more or to pay back at the end of the day. So this is something that we should make an account of. So I'm taking this from my book, Entrepreneurship Make Easy, the chapter 9 or page 267. It lists some of the expenses as business owner you can claim by IRS. Number one is business meal. You see, most businesses, the business meal is allowed because maybe you take your customer, or you have a meeting at a restaurant, you eat, and those expenses is being allowed and is being deductible 80% by IRS. You'll be accepted by that. The second is home office. You see, most of us, we have home offices, but we don't know. Most know they reported it wrongly. Some also don't know how to report it at all. So home expenses, for instance, the space that you occupy as home expense is 1/4 or 1/3 of the total space in the house. So what it means that your total or your yearly rent or mortgage for the year, 1/3 should go to the business as home office expense or home office rent. Utilities or internet, the same thing. Internet, it depends on the usage of the internet for the business or personal use. You should all portion it correctly and make sure that it is being accounted for. The next one is training. Maybe you attend a workshop, you attend a course for your business. All these things are tax deductible.